The bell has rung on a day of extreme contrast. While the SPI Futures warned of a 1.84% bloodbath, the actual index showed incredible grit. The ASX 200 closed down 0.74% at 8,365.90 points, recovering significantly from a terrifying morning low of 8,262. Why did we bounce? Because while big miners were sold off, two sectors became the market's shock absorbers: insurance and retail. I'm Jay, and this is your closing deep dive. The headline story today was the government's shift on fuel security. Minister Chris Bowen confirmed that while supply is currently at 38 days, working from home is now a sensible and encouraged option to curb demand. The market reacted by piling into consumer staples. If we aren't driving to work, we are stocking the pantry. Woolworths and Kohl's both saw defensive buying today as investors bet on at-home consumption. Even Wesfarmers showed resilience, closing at $73.04 as its value brands like Kmart become the go-to during this mortgage and fuel squeeze. Retail isn't dying, it's just moving back to the suburbs. The surprise winner of the session was insurance. Why? Because the energy crisis is an inflation crisis. With Brent crude at $113, the market is now pricing in a higher for longer interest rate environment. This is pure gold for companies like QBE and IAG. They earn massive interest on their premium float, the billions of dollars they hold before paying out claims. IAG finished up 2.48% to 744, while QBE surged 1.17%. In a world of 4.10% interest rates and rising premiums, the insurers are essentially being paid to wait out the storm. Don't forget the underlying pressure. Despite the fuel crisis, our labor market remains too hot for the RBA's liking. We are still digesting those 48,900 jobs added last month. Goldman Sachs today hiked their Brent forecast to an average of 110 for the next 2 months. This is a stagflationary nightmare, higher energy costs driving inflation, while the RBA is forced to keep rates at 4.10% or higher to cool the jobs market. The Aussie dollar is hovering at 0.70, making every barrel of imported oil more expensive by the minute. The 8,250 floor held today, but with Trump's 48-hour warning hanging over the market, tomorrow will be a powder keg. If you're staying off the roads as the government suggests, stay on the charts. Follow Oz Stock Watch for the morning update. Trade smart, Australia.